Hi, everybody. Hi, everyone who joined us, and welcome to Flori Ventures Web3 Credit Showcase. I'm Tomer, a general partner at Flori Ventures. Flori Ventures is a leading global early stage investor in Web3 startups that are using blockchain technology to tackle the biggest challenges of our times: financial inclusion and the climate crisis. Many of the people who join here have probably heard of the 5 trillion credit gap and the unbanked and the underbanked people, and have assumed that blockchain can be a game changer technology to solve that problem. But perhaps a little bit light on the details of exactly what is being built and how does it all ties together to reaching real people in real life use cases, especially now when the global interest rates are going up. There's an urgency to solve this problem and to build a better, more inclusive economy. Uh, that's why we thought this is a perfect time to put up together this showcase to bring you, investors, audience, community, and our 7 amazing founders to come and talk to you about the credit crisis and what are they doing to solve it. Before we get started, some logistics, just so you know what's going on here. Um, so those of you who are new to the Stonks event, our goal of the event is to make connections between you, the audience, and the amazing founders that we have. Like all founders, they're always fundraising, hiring, looking for debt capital, looking for partnerships. This is your moment to come and join them. Each founder will briefly introduce themselves and their companies. During that time, you will see their company portfolio below the screen, along with a button to request to contact. Use it. It's important. Don't worry if you're slow on the buzzer. At any time during the event, you can check out all the companies' profiles and request a connection by clicking on the menu on the top left of the screen. You also see a chat throughout the event right on your screen. Please jump in with questions or word or encouragements, and keep things lively. It's never easy to stand on this stage. We'll try to weave some questions into the panelists if time's allowed us. Um, Beside me, joining me, two great friends today, Chaim and Philip. Both are amazing market leaders in the intersection of blockchain and credit. Um, Maybe we can bring them over, Chaim and Philip, to stage.
Hello.
Awesome.
Hi,
Hi,
everyone.
guys. How are you guys?
Doing good. Super excited for this time together.
Yeah, likewise. Looking forward to it.
Nice. Maybe you talk a bit about yourself and a bit about the credit crisis as we see it in general. Chaim, maybe you start.
Yeah, very shortly about myself. So, Shane here, calling from São Paulo, Brazil. Half Belgian, half Brazilian. Background in finance and blockchain, more in the TradFi space. So, we've been building enterprise blockchain applications for the likes of Australian Security Exchange, London Stock Exchange Group, and different big financial institutions for 4 years. And we really bring that experience to more the DeFi space. So, really building more an institutional global credit product. And we focus specifically on Latin America for that. So we work with non-bank lenders where we're going to tokenize their fixed income bonds, and then are going to make it possible for investors around the globe to invest in these using the crypto infrastructure. So last year we did about 25 bonds that we tokenized and distributed in our pool, in our junior tranches. And we are focusing a lot as well on everything inclusion related here in Latin America. So working with those fintechs that are able to reach those end customers and SMEs that otherwise have difficulties to reach and have access to financing. So very exciting to see that there are a lot of other companies that are also joining in this mission to change the credit world using Web3 and crypto infrastructure.
And my background, I'm actually wearing two hats tonight. One is I am general partner and co-founder of Crane Earth, where we're an early stage fund, actually super happy to partner with Flori on some of our past meetings, where we invest at the intersection of climate or impact and crypto. So using crypto rails to solve some of the most pressing needs of this time. And why I'm specifically excited to be here tonight is because a lot of the projects, be it a carbon sequestration project or biodiversity projects or other forms of saving this planet, they need credit access. And so the projects that are here tonight are hopefully going to be an important building block for building this future where we take care of this planet better and using decentralized technology. And my other hat is I'm also one of the co-founders of a project called Centrifuge, where we started in 2017 to bring real-world assets on chain to make them financeable. And it's so cool to see how the credit space has evolved since then, and seeing all of you here. And just super excited to spend time and have a lively discussion.
Thank you guys for that. And let's bring the lights on who's like the stars of today, our founder. First, we have coming up Maurith, the founder of Simplify. Simplify is a blockchain-powered credit platform that facilitates access to on-demand credit for micro, small enterprises in emerging markets. Can we have Maurice on stage?
Hello.
Maurice, welcome.
Thank you. Thank you. Thank you, Tomer. I can kick off?
Without disturbing, take a stage.
Thank you.
Yes.
Great. Thank you, everyone, for joining us today. You're going to hear some amazing presentations from some great founders. And I'm happy to kick it off today by telling you why we're so excited about what we're building at Simplify. Because at Simplify, we have quite an ambitious vision. What Google was able to do for information and Uber for transportation, we aim to do for credit, to enable anyone to access it on demand, regardless of where they live. We believe this is going to fundamentally transform the lives of millions of people across the world. Why? Because prior to starting Simplify, my co-founder and I worked together for 4 years building microfinance banks across Africa and China. And we experienced firsthand how access to credit for productive uses can transform people's lives, to help them go from a business on the side of the road to owning their own shop and employing people. And we envision a world where we could scale this product and its impact by putting it directly in the hands of anyone who needed it. But we also knew from firsthand experience that it was impossible to do so with the way microcredit works today. So to solve this problem, we had to reimagine how credit and how, frankly, money works. And that's why we built Simplify. Simplify is the first credit as a service platform that utilizes blockchain technology to empower anyone to access affordable credit on demand for productive uses at a fraction of the cost. Our business model capitalizes on two technological shifts underway that makes this possible today. One, businesses in emerging markets and their value chains are rapidly digitizing, so we're able to embed ourselves in digital platforms to meet our target users where they are. And two, money is digital and now programmable thanks to smart contracts. So we're able to build in credit rules into money and allow it to autonomously move to eligible borrowers across the world with minimal friction and costs. For example, in Kenya, we're embedded in a ride-hailing platform called Maramoja that has 50,000 drivers on their platform. And this is Byron. Byron owns a fleet of cars that operate on the Maramoja app. Unable to get access to affordable working capital from local banks, he utilizes our earned wage advance product on the Maramoja app to access his earnings from trips on demand instead of biweekly. This helps Byron better manage his day-to-day cash flow needs for himself and his fleet of drivers. In the past 10 months, Byron has used our product 90 times on a recurring basis. His drivers are now able to pay for fuel and maintenance, which helps them do more trips on the Maramoja app, which helps them earn more money. Since utilizing our solution, Byron has increased the number of cars he has on the Maramoja app from 4 to 11, which in turn has helped fuel the growth of Maramoja. So how exactly does it work? Well, we make it simple. Similar to Klarna, partners like Moromoja plug into our platform via APIs, we then have access to real-time data on the users on their platform to use for credit scoring. Anytime a driver wants an advance, they request the amount on the Moromoja app. The credit decision engine on-chain then gets this request and the data required to do the scoring. If the driver passes the credit rules, money is automatically taken from our USDC liquidity pool, off-ramp to Kenya shillings, and dispersed to the driver. All this is completed autonomously in seconds, 24/7. No bank, no intermediary, no human intervention, just a smart contract and some APIs, and now anyone in the world can advance money to Byron and earn money for doing so. Equally important, because of our plug-and-play model, Moromoja and their drivers never interact with crypto. So the solution now becomes accessible for everyone. And it's not just earned wage advances. We're also embedded into B2B e-commerce platforms in Kenya and Rwanda, and we're enabling merchants on those platforms to instantly access credit to purchase goods for as little as 25 cents a transaction. And we believe this is a $30 billion market opportunity in Africa alone. And we're also delivering the same impact for this use case as well. 96% of users on our partners' platforms have reported an increase in sales since utilizing our solution, and our partners have increased their GMV by 10%. Last year, we processed 11,000 transactions and $1.5 million in transaction volume with a 99% repayment rate. And this year, we're growing even faster. We've already hit $1 million in transaction volume in only 3 months, and we're on pace to hit $1 million a month in transaction volume by the end of Q2. And we're only just beginning. Our end goal is to build global liquidity pools that institutional investors and individuals alike can contribute to, and that digital partners across the world can plug into to access the capital they need to fuel the growth of their businesses and the businesses that operate on their platform, and to create an open and transparent credit system that anyone in the world can participate in. We're currently raising $2 million to scale our platform, and we're excited to meet investors that want to join us on our journey. My name is Mari Siwunze, and I'm the CEO and co-founder of Simplify, and we're transforming the way credit works. Thank you.
First, I want to say congrats. Being first is the hardest thing, like, to be standing on stage. So nailed it, at least from where I'm sitting.
Thank you.
Our Shark Tank, friendly Shark Tank, what do you guys think?
Amazing that you have traction as a first one, especially when we talk in on-chain credit. It's always a question like, what's the volume that's flowing through? So super cool to see this. And I'm wondering, you talked about you have an on and off ramp, but the loans are not done until they actually get repaid. And like, how do you deal with the collection and doing the full cycle?
That's a very good question. And so we partner with we have partners that help us manage the on-off ramping. And so when a merchant is repaying the loan or the advance, they have a repayment account that they pay to, and that repayment account directs their repayment on ramp back to stablecoin via our on ramp partner and redirect it to the liquidity pool.
Awesome.
So I think for us it was big. We're still the technology is still in its early days, and if we really want it to have mainstream adoption, the technology really needs to be in the back end, and the product and ease of use is really what builders should be focused on, and that's our number one priority. So we want merchants and who really need this product to be able to access it without having to figure out how to get a crypto wallet.
Oh, lovely. It's a very nice presentation as well.
Thank you.
One question that popped up from my side is like, are you financing a loan by loan in that case? And what are the average tenors of these loans?
Yes, very good question. Yes, we are currently servicing loan by loan. Average transaction size across all our use cases is about $200. The duration varies. One of our really cool products that excited about is with one of our inventory finance partners. They do a 24-hour loan product. So their users access credit in the morning, sell goods, repay the next day. And they do this on a fairly recurring basis weekly. So that's one use case. It's other partners do 7 days, and our longest duration is a 60-day product with our ride-hailing platform.
Yeah, no, that makes sense. So I also assume, given the short tenors, that you also don't really look into FX hedging, right?
Currently, yes, because of the short-term nature, yes. But as our partners are asking us to help them deliver other financial products, such as with the ride-hailing platform. They want us to work with them to figure out how to do auto financing on chain. And for that type of product, because of the long-term tenor, we are looking at hedging structures for that.
As you're talking about auto loans, and you're likely increasing also the value per transaction, how do you think about liquidity and tapping into a larger liquidity amount?
Yeah, that's a very good question, the million-dollar question. So for us, we really want to be a bridge to bring TradFi players into DeFi. We've had discussions with large investment banks that are really excited about the use case of blockchain technology for real world uses, and they're monitoring our progress to see if it gets big enough for them to participate in. So it's a combination of bringing those traditional players onto DeFi and also being able to tap into on-chain liquidity as well.
And is your pool today permissionless or permissioned? And we ran out of time.
Shane, we need to move. We're moving to the next.
Permission,
We're out
KYC,
of time.
KYB.
Thank you, everybody.
Thank you, everyone.
Thank you, everybody, for your time here. Thank you, Miss, for doing a great job. And next, we have coming up Zach from Gia. Gia provides blockchain-based loans, investments, and ownership to businesses in every corner of the world. Personally, I have to say that each one of those companies are tackling the same problem, you could say, from different directions. Zach's experience in that sense is one of the most interesting experiences that I've met and got to work with. So I'm really excited about you talking today. Additionally, I want to say, guys, try the feature of intros. It's important. Try it. See what it's like to ask an intro. It will help you out because the demo day moves fast and you want to be able to do it when the time comes. Zach, are you ready?
Ready. Can you guys hear me?
Yes, loud and clear.
Sweet. All right, let's do it. First of all, big ups to Maurice for going first. Really set the tone in a great way. And thanks for pulling us all together, Tomer. Pleasure to meet everyone. I'm Zach Marks. I'm a co-founder and CEO of Gia, where we are unlocking financial access in emerging markets. So just to begin, before we get into it, like, why are we called Gia? What is this name? That's sort of an homage to our multicultural heritage as a company. In Chinese, Jia or Jia means home or family, which we think is the central financial unit that we are expanding upon. In Hindi, Jia means heart, and we are building banking with a heart. And finally, in Swahili, which is what they speak in Kenya, or one of our first markets, in Jia means road or path, and we're building the road or path to financial independence. So just to make Jia feel a little bit real, I want you to start by meeting one of our first borrowers, or as we call them, members, Francis Njoroge. He's a spice vendor in Githurai market in Nairobi. And he faces a problem which is really quite common for entrepreneurs in emerging markets, which is he runs a decent business, but he doesn't have access to financing. And because of that, his business is quite hindered. He basically buys in small quantities and pretty frequently, as opposed to buying at better wholesale prices and being able to keep his inventory stocked. So even when I was just visiting him and met him for the first time earlier this year, I actually saw one of his customers, it's a nearby restaurant, come by, and they wanted to buy just 5 kilograms of sesame seeds. And Francis had run out for the day. And so I was like, why did you run out? And he said, well, I have to buy them every other day because I don't have financing to buy a big quantity once a week. And because of that, he gets obviously lower margins. And as we see, he runs out of inventory quite regularly. So this is just, the challenge in Francis's mind, but this is really a challenge for entrepreneurs across the globe. And if you went to, say, a Kenyan bank and said, hey, why don't you guys give Francis a loan? He's running a decent spice business. They'd say probably a couple of things. One, there's not enough data to underwrite. Like, I have no idea how many spices this guy sells, because it's not necessarily always recorded. And two, it's probably too small to make it worth our while. Maybe Francis just needs a couple $100 of financing, as Maurice just mentioned, right? The typical loan size is like $200. That's just too small usually for a bank to make it worth their while, when they could just serve bigger businesses, say in the central business district. So because of that, we have this $5 trillion global credit gap for small businesses. And that really is the challenge that I've spent my whole career working on, is that $5 trillion credit gap. And I think of the phases of how we've tried to tackle this problem in sort of maybe three major phases. So the first phase, microfinance 1.0, was sort of like the Grameen Bank model that a lot of us are familiar with, working with community finance groups. And that's sort of where I started my career, working with community agriculture microfinance in South Sudan and a few other markets. And the beautiful thing about this model is there's really high community trust, because people they basically are owning this community finance group. What happens is people typically save and borrow together. And so when everyone repays, everyone's boats rise. And if someone defaults, then everyone else is sort of on the hook. Now, that's great because everyone sort of knows each other and is invested in each other, but it's really difficult for this model to scale. So once these groups get beyond, say, 20 people, they often start to break down and you start to see defaults. And for formal microfinance institutions to work with these groups, it's quite operationally intense. You have to hire a lot of field staff or loan officers to go and sign up new groups. And of course, it's not a very flexible or personalized credit experience. Like, imagine if you had to, every time you wanted to swipe your credit card, you had to get 10 or 20 of your friends' permission. It's not a very modern experience. So seeing those challenges to scale is what led me to join what I call like the second wave of microfinance, which is using technology to try to solve this credit gap. And so what we've seen in the last decade is a lot of fintech lending apps have come up. So I was an early team member at one of the first sort of mobile lending apps, this idea that maybe you have 3 billion people in the world without a credit score, but most of them have phones and your phone has some data. So we can create an app which can use phone data to underwrite. And the beautiful thing about this model is it scales in a really seamless way that traditional microfinance doesn't. In the time I was at this company, we went from, I think, 6,000 to 6 million borrowers in just 6 years. But what you totally lose from the community microfinance is that sense of ownership. And so I heard this actually quite commonly. Like in Kenya, I remember a borrower saying, hey, in my SACCO, which is a savings and credit cooperative, when I repay, I put my money in and I get shares. And I've been taking your loans for 6 months, so why can't I have shares from you guys? And because we couldn't offer shares, there's really low loyalty, leads to really high default rates, since of course you'd repay your local group over some personless app. And because of the high defaults, the interest rates get priced to commensurate with that risk, and you end up with sort of these misaligned interests between lenders and borrowers. And now, even if that company, even if fintech lending apps wanted to distribute ownership, it's really difficult for, say, like a US-based tech company to just seamlessly distribute equity shares around the globe. And that's one of the beautiful things about what the token model of the blockchain allows you to do. Because if you represent if you represent ownership through a token that has a claim to some on-chain revenues, then you can actually distribute ownership quite efficiently and effectively. And that's sort of what we're doing at Gia, is what I think is going to be microfinance 3.0, ushering in this ownership economy. Whereas with traditional banks and fintech lenders, a borrower is just a customer at the end of a sort of a one-way transaction. With Gia, the borrower is not just a customer, they're actually an owner. So they receive financing, and when they repay, they get Gia token rewards. So they're actually building wealth and community for wealth and prosperity for their community, and not just getting access to financing. So let me just tell you how it works. Again, if you put ourselves in the shoes of Francis, how he experiences Gia. So we come in and we meet him where he is. We don't, we're not saying, hey, we're some crypto thing. We're just are meeting his need for financing. In Francis's case, we actually tie up with a partner where he buys his spices from. So he actually is, instead of just distributing cash to him, he's actually just getting an inventory financing product where he's buying those spices on credit. So we meet him through that partner where he's borrowing from Gia to purchase some spice inventory. Now, when he repays, that's where this starts to get interesting. He receives some Gia tokens. as sort of like a loyalty point. And that's sort of how he experiences them at first, just as a loyalty point. They unlock better credit terms. He can get lower interest rates, higher loan amounts, more flexible repayment terms. But eventually, we're going to be able to demonstrate how that GIA token is worth more than just a credit reward. It's actually an ownership token. What we're doing in the back end, even though the crypto is abstracted from Francis, when he borrows, every time that happens, money is being off-ramped from an on-chain liquidity pool and distributed to him. And when he repays, that money is re-on-ramped back on-chain to provide a return for LPs. And so what we're doing is really building the Web3 footprint for Francis for the first time, so that he can access in the long run, not just credit from GIA, but from other credit protocols, like some of the folks who are on this demo day today. One of the really powerful things about a token model, of course, is it helps sort of bootstrap a community and help it grow. And this really mirrors what people already do to grow their local community finance groups. Say Francis wants to bring in a fellow borrower into his Sacco, he'd have to stake some collateral for him. And with GIA, if he does that, in addition to just staking collateral, he stakes his GIA token. Then when that borrower repays, he actually gets some rewards for that because he helped underwrite it. We hear from borrowers all the time that folks don't just need access to finance, they need access to services. And so, like, for example, Francis has talked about needing digital marketing help to take his business online. And so he can pay for that with the GIA token. So it's another use case. And finally, if we sort of look at the end of this, this user journey, we see that Francis is not just sort of a customer on the end of a transaction, but he's really an owner of this community. He's participating in governance, he's helping grow it, and he's really building the community. So just real quick, like where we are today. Last year, we got started by raising an oversubscribed seed round, and we used that to just start building the protocol and begin actually lending, which we did this quarter in Kenya and the Philippines. Those are our first two pilot markets. We've launched inventory and invoice financing products there. Later this month, actually next week, we are launching our first on-chain pool, which will let investors like yourselves participate and earn yields powered by these real-world businesses. And later in this year, we're actually expanding to new credit verticals, including asset financing and other financial products such as savings and investments in new geographies. So I think my time might be up. So I will just leave it saying that we'd love to work with you. Thank you. Cool.
First of all, amazing. I love the fact that you talk. No, staying with us, Zach.
Okay, cool.
Like, you need to stand in front of the Shark Tank. Don't worry, you're not escaping it because it was a bit longer.
Awesome.
I love the fact that you took the same revolution that we talked about, the web going through. So you're taking the same revolution into credit of the Web 1, Web 2, Web 3, and Credit 1, Credit 2, Credit 3 in that sense. So I love that analogy. Philip, James, what do you think?
Yeah, I think I heard one thing that really intrigued me, and I've heard it sometimes as well coming up, but no one really doing it the way you guys are doing it. And that was specifically, I noted down here, a claim on revenue through a token. So I'm wondering, like, is there really a legal claim on a token, or how do you enable that claim on revenue on a tokenized way?
I guess the simplest way to think about it is pre-on-chain world, what does equity in a company represent? Equity represents a claim to the discounted cash flows of that company. In the same way, a GIA token is just a claim on the GIA treasury, which is where the protocol's revenues go. And effectively, you can think about the GIA protocol makes some percentage of each loan repayment, the part that doesn't get returned to the liquidity providers.
Okay.
And just kind of a building on that is, right now you have the crypto side under the covers, right? You have the fiat on and off ramp, but in the future they will have GIA tokens and maybe pay each other with GIA tokens. How do you support the communities to actually come onto Web3? Like, these folks might have no exposure before.
Totally. Yeah, I mean, I think a lot of that is why we're really focused on just meeting folks where they are. I mean, we do have to start with the crypto abstracted, because I think it's too much to come in and say, hey, you have to learn how to deal with custodian, wallets and all this other stuff. So we're really including a bunch of crypto education just the basics in our app. I think similar to how with the company I worked at before, a lot of folks had never used mobile financial services. They'd never downloaded an app to take loans for. But then when they had that use case, they began to learn. And what I found is people will, if there's a benefit for them to have, people will actually go work pretty hard to try to learn how to use it. And so I think it's on us, though, to provide some great crypto education for what it means to hold your money in a US dollar stablecoin as opposed to just keeping it in shillings, for example.
Cool. Thank you.
Awesome. Thank you, Zach, and thank you, Chen and Philip. Next, we have coming up Ashley. Sorry, no, we have Ignacio Ashley, sorry, my mistake. Ashley from Resource Network. Resource is a decentralized protocol for mutual credit and multilateral exchange, enabling individuals, businesses, and the entire network to access credit without the need for capital or interest payment. Hi, Ashley.
Hey, how's it going? Thanks for having me.
Good. I can't see you for some reason.
My camera's on. Let me restart.
Okay. Try.
Can you see me?
Okay,
Jesse,
you see it. Yes, that's my problem. Funny story about Ashley. Me and Ashley accidentally met a year before. We have a business relationship in a house where her and her husband walked into my house and I said, like, is this house for sale? That was a funny anecdote about our interaction. Ashley, with that, I'll give you the stage. Enjoy.
Thanks, Tomer. Yeah, it was a fortunate meeting. So, I'm the founder of Resource. Resource is building innovative credit systems that enable more self-reliant communities. So we provide a collaborative credit network. It offers financing without the need for capital or interest payments. We're doing that by innovating upon an old system called mutual credit that we've standardized into a decentralized protocol that provides more capital-efficient lending, stimulates transaction velocity for merchants, and lowers the rate of defaults. So mutual credit, it's a credit clearing mechanism. It allows participants to buy on credit and they pay back in kind by selling their goods and services to other participants in the network. So we can go through a scenario. We have Alice. She buys something from Bob. She sends him 100 credits and now has a balance of a negative 100. She's able to then repay that when someone else in the network buys something from her. No money has to be exchanged for this to happen. We're just using the ledger to keep track of the exchange of goods and services within the system. If we amplify this to thousands of participants in different networks, we can generate an internal monetary supply to extend highly cost-effective credit lines and also lower the chance of defaults. So some features of mutual credit lines. There's no compounding interest payments. Instead, we cover the risk and network revenue from transaction fees. It enables highly flexible repayment schedules from the ability to use transaction fees as well as being able to pay back in your goods and services rather than just having to pay back credit and fiat. This also enables lower than average defaults. The credit becomes more cost effective as it doesn't require collateral from the merchants to get started. And as a network, it can become under collateralized, meaning based upon the network risk, we can learn how much we really need to have in a reserve to accomplish the goals of the growth of the economy. So far, we've turned this system into what we're calling the stable credit protocol. It's a standardized stable credit system that allows for self-stabilizing network currencies. So anyone can go out and launch one of these networks. We include professional and automated risk management on par with traditional financial products. And we're also enabling trade amongst multiple different networks as part of one global meta network. Recently, we've been able to add the ability for fiat loans on the same favorable terms as mutual credit lines. So this is a diagram of how that works. Basically, a business can request a loan, and that loan is going to be paid from community members or customers who come and buy stable credits, essentially like a gift card at a discount that they can now use within the network of businesses. So the business can get the loan today, get the dishwasher they need, and pay back when someone comes to buy things from their cafe. And that's essentially how that works. So the fiat loans are different from normal fiat loans in the sense that they don't have interest payments and they're repaid in the same way as those mutual credit loans are, by essentially offering their goods and services back to the network. So here's where we are today. Last year, we launched a network in the US. We issued 1.2 million in mutual credit lines across 3 different cities and saw 500,000 in transaction volume. We took a step back and we looked at the lessons that we learned from that pilot, and we re-architected and now have released the open source stable credit protocol that we think will enable people to launch these networks anywhere in the world. We've also developed our first version of the underwriting and risk management logic that we're going to use this year with networks that we partner and launch with. And we've established partners in 3 different African countries and 1 existing barter and trade network company that we're implementing this year. So technically, where are we? We're building our SDK right now on top of our open source protocol that we've released. Then we'll be finishing out our network operator and ambassador portal. Ambassadors are very important for our system to be scalable, and also an Android app. That's going to enable us to launch 3 different networks in Africa, starting with a group called the Sanergy Collaborative as a partner who's already very established in Kenya. Then we'll be working on an iPhone app and other grassroots tools that will enable us next year to be able to start a launch your own network campaign where anyone in their community will be able to get one of these kickstarted, and they'll be able to be incentivized to do so, and as well as start to develop partnerships with other fintechs focusing on emerging markets. So our business model, so we can launch and operate our own networks. We can also provide our risk management service to networks such as our partners that we're working with, and for others that want to start networks with in the future. Eventually, we're going to build a clearinghouse to allow for exchange amongst the different networks that are started using the protocol, and of course, other tooling and interfaces that you could imagine once an ecosystem forms. So currently today, we raised a seed round last year, so we're not currently raising. We're in the process of launching networks with different partners and establishing our initial business model with them. And based upon that data, we'll be raising next year. So right now, we're really interested in people who want to talk about longer term partnerships, who have interesting networks of businesses. They already have data about their businesses and want to look into providing some sort of alternative credit service. So that's our website. That's where you can find information about the protocol. You can find more information about how the whole system works in detail. And then that's my contact. And thanks so much for having me.
Awesome. Thank
cool.
you for that, Ashley. A bit info about myself. I'm coming from community currencies and mutual credit. That's and I've seen the power of it. This is the power that crypto allows us to issue and reimagine economy in its highest level. So super excited about that, and also the traction, Ashley, that you have. We'll bring Philip Chain for your thoughts.
Yeah, my initial question is, like, you're building a protocol, right? And then you're offering services potentially on top. And how is your go-to-market looking like? Like, what are the communities that you're trying to get into? Like, what are the existing Web2 platforms? Is it more people who have no technology today? Like, how are you interfacing with them, and how you're getting them on board?
Yeah, so example of one partnership is a UBI project that's actually already on the Cello platform. So they've already established a network or community of people that are receiving a value-added service. They've had their first crypto wallet. So now this will now be something embedded into the app that they're already using to claim their UBI. They'll now have ability to access this mutual credit network. So that's an example of people who need access to credit, maybe don't have a lot of good options, and they're already sort of familiar with some sort of process. We found that that's a little more scalable than us going out and onboarding businesses directly. So kind of trying to find something in between, like a very established product and maybe something that's a little bit more up and coming, like UBI, but need some help on their front to get to a more scalable version. So later, we are going to be developing the tools that are more grassroots, where if the tool just works itself, you could get it started in your local community. But we have a lot more tech to build to really enable that in a way that I think will be scalable, where it doesn't have to be a lot of interface between us and the people on the ground.
So the starting point is folks who also have some Web3 experience already. Is that right?
For that use case, yes. So our wallet doesn't require needing Web3 user experience. So it'll be using something like Magic Link or Biconomy, depending where we are, where the understanding of the wallet is abstracted. And of course, you can add in more security later on as the network grows.
Cool, thanks.
Yeah.
Big question from my side, Ashley, is how do you price credit, and how do you price also the services or goods that people give in return? Like, how does that process look like?
Yeah, so the existing mutual credit industry already has a standard for this, and basically we improved upon that. So the standard is you price your goods and services just like you would. So if you have an hour of consulting time and that's worth a certain amount of dollars, you price the goods or services in that same amount. The way that that's enforced, people are paying transaction fees based upon their particular credit risk profile is one way. The second way is when there are defaults, the person does actually owe that in the currency of their network, what we call it a reference currency. So say that you default on $100 you actually, or 100 US credits, you actually owe $100 to the network, and that's enforced in like a membership agreement.
Awesome. One last question before we wrap this one up. Like, we're going into 2023, you're not raising at the moment, meaning you're capable of delivering. What's your goal here? Like, what are you trying to achieve right now?
Yeah, so our goal is to show basically how cost effective this type of credit is. So for the networks that we're setting up with our partners in Africa, we're basically going to demonstrate, with this much capital in the beginning that you need to kickstart a network. This is how many credit lines you're able to extend. This is the ratios that we predict that the reserve needs to be to provide enough credit to this amount of people. So we're really trying to work through the economics of providing these services and get that to a place where it looks like there's a viable business model that we can carry forward.
Awesome. Ashley, thank you for this amazing presentation, and thank you for taking the journey, you and the other founders, of fighting for what's right. So thank you.
Yeah,
Next,
congrats.
we have coming up Ignacio from Finanex. Finanex mission is to support the export potential and volume of small and medium agribusiness in Latin America and the US, generating sustainable impact in vulnerable rural communities while increasing export capabilities to countries with food deficits. Ignacio?
Hi, Tomer. Can you hear me well?
How are you? Yeah, I can hear you well.
Perfect. Okay.
Are you ready?
I'm ready. Yes.
Yes. Let's go.
Okay. My name is Ignacio. I'm the CEO and co-founder of Finanex, a fintech that provides flexible export financing for underserved agribusinesses. So I would like to start with the question is why Latin America is not feeding the world when it has the capacity and resources to do so, particularly now in a moment of food scarcity due to the war in Ukraine and Russia. So I traveled to find the answer. I met with farmers all across Latin America, in Guatemala, Paraguay, Peru, Mexico, and also with exporters who are the buyers of the farmers, like Andres, who is in the right of the picture. And the question that I was always asking is, why aren't you producing more? What is stopping you from this? And the typical answer, and it was very interesting from farmers, was not lack of resources, but lack of access to markets. Very interesting, particularly now in a context of war, right, or high demand. And the question that I ask the buyers, like Andres, who buys from the farmers, is why aren't you buying more from farmers who are saying that they don't have access to markets? Well, the typical answer is because they don't have the funding or the capital to buy more from farmers and export more. So this so the food crisis that everybody's talking about is not because of lack of food, but because we have a food supply chain that is broken. Farmers have limited access to markets, and exporters like Andres, they don't have access to capital. Banks are rejecting them. So this is creating a big problem. Only in Latin America, the trade funding gap is 350 billion. So how in Finanex we are trying to reduce this trade funding gap? Basically by filling the gaps in the food supply chain. We offer a funding process that is 100% digital, faster, and more agile than banks. And this allows us to analyze the export or the transactions in a different way. Banks analyze the historical information of exporters, the background, the balance sheet, income statement. Because we move faster and we have a different approach, we can analyze the export information and have that security with the product. So this is allowing us to serve more clients, more transactions across the region. I remember very well my first loan was in early 2022. I wired $200,000 to an exporter of beef, shipping to China. And my wife was saying, Ignacio, you're crazy. We're wiring all our savings to somebody that you barely know, and also expecting to get paid in China. So she was saying, we don't even have a car here in Mexico. So yeah, we have a kind of an interesting conversation, but so far we have done 20 million in our first 12 months, assuming a very limited risk. My relationship with my wife got easier and better. We are diversified in 6 continents. Mainly our exports go to Southeast of Asia, China, India, Bangladesh, Philippines, where 45% of the population is. And we assume very limited risk. I always say that it's sometimes very easy to do a loan in emerging markets, but the challenge is getting paid back. So we design a product that we have collateral that is not in emerging markets, but floating in the sea, a commodity like grains, seeds, chia seeds, beef, coffee, and we have control of that. And that's why we have done this amount of volume without assuming defaults. We are growing, we are profitable, we haven't burned $1 since day one. And we have 15 clients with combined revenues of more than $1 billion. We have received LOIs, letters of intent from them for more than 120 million. So from a demand perspective, we are ready to scale. From an operational perspective as well, we do 1 loan every 2 days. We can do 20 or 30 loans per day. The only missing part is the capital. So we need to have more capital to meet the demand that we have. Probably we are serving the hottest market, one of the hottest markets in Latin America. The demand is massive. And in terms of the team, my 2 co-founders, Jonathan and Victor. Jonathan sold Yonder, an artificial intelligence startup last year where he had more than 20 clients, Fortune 500 clients. And Victor brings more than 20 years of experience in entrepreneurship, in trade finance as well. I'm probably the least experienced of them all, honestly. But I bring some experience from Generation Farms, one of the largest growers of Vidalia soy onions. They're pretty famous in the US. And in terms of our investors, we have investors from Europe, Latin America, and the US. We are very grateful with the help. And we always look for an international cap table because we have a global product and we like to have local connections in the countries that we operate. So I will pause here to see if you have any questions.
Thank you. I'm looking at the stack, and the first thing I want to say is Ignacio crazy. Even after you proved that, it still fall under the definition of crazy. You didn't prove that wrong. But past that, Philip, Chaim, do you have any questions that like interested to understand why and how is Ignacio doing what he's doing?
Yeah, I was interested in understanding this. How do you source both capital today, and how do you find your partners and origination partners?
So we started with our own savings, and then we started raising capital from VCs, and now we are sourcing our debt from private lenders or from funding from shareholders. And because we know that we are early, we are young, we don't have the track record to raise institutional debt, but we are working on that process. We have received so far 3 term sheets from 3 institutional lenders for up to 30 million. And we are negotiating the terms and conditions. This will be our first institutional loan. So, the terms are probably some kind of aggressive. So we are trying to negotiate them and also raise more equity to basically have better negotiation with them.
And how do you scale the other side of the business, right? So there's capital coming and liquidity. You say you will be able to scale the other part. And also, how does that differ in the different areas, like China versus the US versus other emerging market?
Okay, so basically, the tensions between China and the US is creating a generational opportunity for Latin America, particularly Mexico, where I am. I see many factories coming from China to Mexico to export to the US. So those tensions are basically, helping us. And in terms of your question in scalability, so we have a product. We are based in the US, and we can serve clients across the globe. So for example, our last client is based in Madrid, Spain. And we are onboarding clients in Central America. We started in Argentina, but we are serving in more than 5 or 6 countries. And because at the end of the day, we don't need to be in the local jurisdiction of the countries where our clients operate, because our collateral is floating in the sea. So we don't need to have an entity in Guatemala to serve a coffee exporter. So that's why in only 12 months we have grown internationally, serving many clients around Latin America.
Yeah, super cool. How do you see, like we talked earlier about tapping into DeFi liquidity or on-chain liquidity? Is this something that you're considering, especially if you say this is stable, no defaults and so on? This would be good collateral on-chain.
Yes, we are exploring that. I would love to learn more about that as well, because at the end of the day, trade finance is sometimes, or most of the cases, you deal with very traditional banks. And so we need to learn more about how we can start working with DeFi and see if we can get cheap capital from those sources.
Okay. Thank you.
Thank
And
you.
how, because you mentioned indeed low default.
You go. We have time for last question.
In case of defaults, how would you do default recovery?
So if we don't receive payment from the importer, we don't deliver the product. So it's very, very difficult to find the scenario of a default. If an importer is not paying for the container, they don't get it, and we can resell it to somebody else very quickly because it's a commodity. It's not like, I don't know, this phone or whatever. It's a commodity. So we have a very liquid asset as collateral. And there are many, many exporters in Latin America. Probably they don't have all the information to apply to a bank loan, but they sell a good product. And banks, they cannot analyze that because the export is only probably 30 or 45 days. So they need to be very quick to analyze that information, and they cannot. So there's a massive opportunity to finance export food, particularly now where the demand is at all-time highs.
Cool, thank you.
Awesome.
You're welcome.
Ignacio, thank you. With that, we say hello to Jory from Etikab. Jory, you with us?
Hey, hello. Do you hear me, Tomer?
Yes, a little bit about Jory and Etikab. Etikab is a regenerative finance protocol helping unbanked farmers access capital at low interest rates in a win-win model where all stakeholder benefits from the interactions. I will tell you that my little sister, when traveling Latin America, if I'm not mistaken, Mexico, talked to Jory's co-founder, who sent her to visit some of the coffee farmers and was very excited about the experience. With that in mind, Jory, your stage.
Yeah, thank you very much for inviting. And yes, I am Florian Brewster, co-founder of Ethicap. And we call ourselves Ethicap because we care about the money, what the money is going to be used for. We work with smallholder farmers in developing economies, which are the majority of the excluded from the traditional financial system. So we say, okay, we have this super cool technology. We should use that for solving the biggest problem of the traditional financial system. And the biggest one is that it left excluded a quarter of the world population. And most of them are smallholder farmers in developing economies. And that's why we are in this intersection of crypto impact. We focus on farmers since 2017. I think we are one of the very first refi and DeFi protocols ever. And why they are unbanked is basically because in one side, there is no data to do credit scoring. Normally they don't have mobile phones, most of them, nor internet connections, and some of them still don't know how to read or write. So it's very tough to do credit scoring on these circumstances. And in the other hand, if they have papers on their plot of land, it is 2 hours drive and 2 hours walk. So nobody wants that as collateral. So we had to invent something new, which we call crowd collateral, which basically means there are some stakeholders in the system which buy ethics and stake on behalf of the farmers, so they have collateral. And in the other hand, we have the lenders who provide the working capital, to whom normally cooperative finance of smallholder farmers. So it's, in some sense, is similar to Finanex because we work with coffee, because this is what we know. I have been coffee producer myself, and my family have a coffee farm, etc. And we know this problem very well from the scratch. And we also count on auditors, which are trusted entities who provide the due diligence and stake on behalf of those loan originators, so we can be scalable. This is basically a two-pool system in one lending pool made of stable coins with a stable yield. And on the other hand, we have the staking pool, collateral pool, compensation system made of ethics. So if there is any default, we sell ethics to cover that default. But if there is no default, as you want to be covered by the compensation system, that means you 4% of your loan goes to buy back ethics from the market to further capitalize the compensation system. So it creates a sustainable demand for the ethics. So as far as we have below 4% default, we are taking more ethics from the market than the seller pressure that is created when selling them because of the defaults. So we are creating an incentive loop for the ethics. And this is not small at all. Only in Mexico, only in coffee, there are more than 500,000 smallholder farmers. And we are doing already pilots in Brazil, Colombia, Honduras, Peru, Ecuador, in order to prove this is scalable. We can do it very fast if we count it with the resources. And this is not only words. We have been in the space for years. And I think one of our biggest assets is legitimacy. The legitimacy that we were creators of this category, and we have tons of prizes from very trusted entities, both in the traditional impact space and in the crypto space. Last award was from INATBA, which is one of the biggest associations, blockchain associations worldwide, advising the European Union, for example, and they granted us with as best refi protocol. In one side, we have the lending protocol, which is with the aim to become a DAO, governed by the ethics holders, for sure. In the other hand, we have the equity company, who want to provide value to this decentralized ecosystem. And in this equity company, the business model is not only the lending business model made because we are the first trusted auditor. All the cooperatives we onboard, we take a fee in the loan. But in those cooperatives, we not only help them get funded, but we use that funding to sell that to help them sell that coffee. And we have intermediated hundreds of tons of coffee, and we count on super strong unit economics because of this two-sided business model with the product market fit and the product fee and the lending fee. We have more than 3,000 users already. We have intermediated more than 3 million in microloans with less than 1% default. And most importantly, this 1% default was 100% covered by the compensation system. So nobody who has lent in EthiHub has received below their capital plus fixed interest rate. And we are, besides being in these 6 countries where we have been the auditor, we already count on the second auditor, which will be Hafer International, which is one of the biggest NGOs worldwide, working with smallholder farmers, with cooperatives, in hundreds of cooperatives in tens of countries. And they invested in us because they want to distribute the money to their farmers using EthiHub and co-invest with our community, with you. So now you can become an EthiHubber and participate in our seed round, or just buy ethics and stake on behalf of our farmers, or become a retail lender and lending to those farmers and try the system, or participate in our first lending vehicle. We already have a first institutional investor, which is the Inter-American Bank for Development, which is one of the biggest banks worldwide. And we also want you on our cap table. Thank you very much.
Thank you for that, Jory. I love the how connected you guys are to the ground in the type of work that you're doing. The impact has so many layers beside the pure number, and I love how connected you are to it. I will say something before we go to the questions. The event was planned for an hour and a half, and the invite was sent by mistake to an hour. Hope everybody is okay with that. I can see the audience now, and I see that we're holding strong, and everybody is still with us. So thank you for that and for the understanding. Philip Chain, your stage.
Super cool. I love EthiHub. I'm a big fan, and I kind of have the question building on what you said. You are at EthiHub. You're really in the ecosystem, coffee. You understand it super well. You're growing this, and I wonder what your thoughts are to expand out of coffee at some point. And is this something that you have on the roadmap that you're thinking about, or are you saying we're just going to own coffee and we're going to stick with this for a long time?
I mean, you start with somewhere, because as Amazon started with books, we started with coffee. And we, as an auditor, we are doing a first pilot in cocoa, which is very similar, and we know about cocoa too. But the idea in order to scale is not that we are the auditor, the only auditor in the system, but others, trusted entities, become auditors. So, for example, Hafer will have not only coffee cooperatives, but farmers of basically whatever they work with. And we will work with different kind of auditors with different verticals doing different things. That's why we call ourselves EthiHub, not AgroHub, not Coffee Hub.
Yeah, beautiful.
Jory, what was the? I think I saw it on one of your slides. What is the return that you can provide to your investors?
For now, is fixed 8%. I mean, when the farmers pay the loan originators 16% for now, 8% goes to the lender. If you invest in our lending bonds, these trust minimized bonds, which is a DeFi primitive we invented, this is about you choose the term, the longer term, the higher yield, and is collateralized by the ethics from the stakers.
And the 16%, that's in local currency or that's in the US stablecoin?
Stablecoin, and this is the cost for the lender, for the borrower, sorry, for the cooperative, not for the lender, which is 8% for now. I mean, between 7 to 10%, and now we will start having some farming, so some extra yield with ethics, vested ethics. So in order to, because some people is doing 16%, half of it in their own crypto, and okay, we have to play some of this in order to compete.
Okay, yeah, because that was one of the things that I was thinking about. Like, if you look into the risk-free rate, it's already at 4.5%ish. 7 or 8% would potentially be difficult for you to raise capital right now. And that's why you're looking into additional incentives, right?
I mean, in the lending side, we started with retail because when you are starting, nobody trusts you. So we have to ask our circles of confidence. But the idea is we are just with the metrics to go to institutional lenders, and we are raising our first institutional fund. And the idea is the lending is institutional and is impact funds, and they are happy with 6 to 10%. Inter-American for Development Bank loan is below 4%. Hafer International money is below 8%. So if you are impact, you can access more affordable working capital.
Sorry to cut us, but we need to cut this conversation and move to the next one so we have enough.
Thank you, Jory.
Jory, thank you. Thanks a lot for your time, Tim. Moving to and Brendan. Mesa is an identity infrastructure for building Web3 communities. Basically, like every other product, and that's my take here, like every other product, it has a supply chain. Identity is the bottom of the pyramid when it comes to the supply chain of money, in a way. Brendan, I'll let you explain more about what it is that you're doing, but excited.
One more thing. So great to be here.
One more thing, guys, there's the intro button. If you want to talk to Brendan, if you want to talk to Joy, click on it, ask for the meeting. Trust me, it's worth your time.
Thanks, Tema. So it's really wonderful to be with everyone today. Great to see some familiar faces across all the companies. And I think what you're going to hear from us this morning is something just a little bit different. It's just incredible to see everyone that's really focusing like on the ground to bring credit products to the 3.5 billion people globally that need access to credit. I've been in the Web3 space since around 2013. Been riding the waves and troughs through the space, and spent the last 4 years of my career building credit models in emerging markets that ultimately end up being more accurate than local bureaus with a very high ROC, AUC characteristic. And we would sell into banks, credit bureaus, and fintechs, both in Nigeria and Kenya as well. And founded Masa with a vision to give everybody equal access to finance or equal access to credit. And since our founding about 18 months ago, we've really changed a lot. We were originally looking to provide a full stack solution to provide credit to underserved people. And now we're focused, as Thomas said, on bringing identity infrastructure to Web3 developers building communities. And every single person here today, when they're offering credit, is effectively offering credit to a specific community with specific terms and specific pain points. And credit scoring is one of the identity primitives at the core of Masa. And today we support on-chain scoring and real-world scoring in emerging markets in Nigeria and Kenya. And these scores are attributed to a non-transferable NFT, or as we call them, soulbound tokens. Today we have around 19,000 credit scores on our protocol. You can sign up to Masa today, you can mint a score, and you can apply for loans with Teller with a lower collateral ratio, and there'll be more integrations to come over the coming months. And our vision now is to bring humanity on chain by giving developers and teams like we're seeing on this call today the tools to build thriving Web3 communities. So What I mean by a thriving community is one that is aligned with the product, aligned with incentives, getting value, and able to really kind of get a boost to contribute to their community economy and the broader economy globally as well. And using our composable identity infrastructure, it's super easy for developers to build and scale their communities. So in every company you see today, you have to go through the process of acquiring a user, retaining them, and then verifying them. We consider credit a verification. You're verifying either a user's assets, you're verifying their identity, you're verifying they're trustworthy, you're verifying a score. But all the way through this cycle, identity is used at different points. So we have a range of tools, a toolkit as it were, all built on a base layer as identity infrastructure as a service that allows any Web3 company to quickly and easily start acquiring users, retain those users, and then verify them. And credit is one of those core use cases that we've pioneered. It was our entry point to the market, and we've since been expanding to offer more products around identity. As a company, we've taken a two-step plan to become what we believe is the de facto Web3 identity infrastructure. We started off by going B2C. Over the last 8 months, we've acquired 300,000 users. These users have minted over 900,000 identifiers, as we call them, whether they're a soulbound token or an NFT. This can be a Web3 score. It can be a real-world score that's calculated from a mobile device. It can be a two-factor authentication to prove you're not a bot. It can be a KYC. We have this ubiquitous generalized layer that allows for any physical or on-chain data attribute to be represented on-chain, either publicly or privately. And now we're moving to a B2B2C. We're really going as the infrastructure that makes it easy for developers to build use cases, of which credit is one of those core pillars that's being built on top of Massa. And it's working. Developers love our product. We're generating revenue. We have a huge community, and we're built across 5 different chains right now. Celo is one of our strategic partners, along with Polygon and Binance. We just got accepted into Binance's most valuable builder accelerator recently, and we're going to be rolling out on Coinbase's base platform as part of their core identity infrastructure, bringing Coinbase KYC into the base ecosystem and looking to onboard the 100 million users that are currently using Coinbase's centralized product. We believe the next crypto cycle will be driven by the expansion of these communities we're describing and powered by our infrastructure. Today, there's 33 million monthly active wallets in the top 10 blockchains. We see that growing to 300 million over the course of the next 2 to 3 years, and our infrastructure being critical and credit being critical to unlock those next users. We realize and acknowledge infrastructure protocols are foundational for the next crypto cycle. We see credit infrastructure as that critical piece to really bring liquidity, trust, and stability, honestly, to the Web3 ecosystem, and it really will unlock its true potential. We have a seasoned team. I myself have been in the Web3 space for a long time. My co-founder, Calanthea, was one of the founding team members at PayPal Ventures. Our head of engineering, Sebastian, founded Ocean Protocol, and Amateo, our head of marketing, grew Voyager from 300,000 users to 3 million users at their peak. And we're back with some great investors and partners that help us grow aggressively in our roadmap. We've raised about $7 million to date. We're just starting to do a private sale, which leads up to our token launch in the summer of this year, as we launch an Oracle network that allows all of these identity attributes to be decentralized and governed by the community and those people using it. And right now we're raising $5 million to build the Web3 identity infrastructure that brings humanity on chain. It gives us 2 years of runway, allowing us to grow to 10 million users, doubles our team, which is mostly engineering, allows us to continue our integration and expansion to the top 10 chains, and launching our identity and Oracle network, for which the Massa token is staked in order to provide governance, relay transactions, and provide gasless fees for account abstraction using EIP 4337. So we'd love you to join us, bringing humanity on chain. Feel free to reach out to us, hit interest if you're interested in talking to us, and excited to ask some questions.
Awesome. Super excited about that. Like, once you, for the first time, try to be without identity, try to open a bank account, try to do anything when you're just a balloon in the air, And I advise everybody to just try it once. Try to be like, talk to any institution without having an ID. It's pretty insane. And seeing someone building it from the bottom up all over again, reimagining what identity is, I thank you for that. Philip, Jay?
Yeah, super cool. And congrats also on the growth as you showed the numbers. It's so good to see somebody actually having actual usage. And I'm curious, like, what are the use cases that are being built on top of you right now? Is it more Web3 focused, or are you also able to compete with some of the traditional identity providers that are not using decentralized tech under the covers? And how are you approaching that going forward?
Yeah, it's a really good question. At this point in the cycle, we're purely focused on Web3. We anticipate over the next 2 years, which is sort of typical for the way the cycles play out, to see Web2 interest really coming back in force, maybe in like the 12 to 18 months. So right now we're deeply focused on how we can bring higher value and more utility for those existing Web3 projects that are looking to expand their product offering, really expand within their user base. Maybe that's bring a credit product into it, a financing product, or starting to think about more of like a permissioned KYC use case vis-a-vis Coinbase. Coinbase, with their base blockchain, is really, how do they get their current identity that they're doing in a centralized fashion on chain, and then build an ecosystem around that. So in order to have them be compliant within the US context, KYC and identity is critical for Base to be successful in their kind of strategy. So we're one of those key building blocks. And we've really differentiated ourselves from like DID or VC, which is, using a different set of primitives to us that aren't tokenized to provide identity. And we're really compatible with that existing ecosystem. So focus on Web3 right now. And, Coinbase is a good use case example.
Small question two small questions from my side. One is, who do you consider your main competitors?
Because we're running out of time.
Just one? All right.
Yes.
Because, for example, Coinbase was part of Variety, for example. Now you're also working with them with their base product. Who is your main competitor you see today?
It's a good question. Who's our main competitor right now? There is a company that dominates Asia called Cyber Connect. They do infrastructure for identity and data representation on chain. I think they're our nearest direct competitor. Relatively unknown in this context, but very big in the Asia community for providing identity and developer tools on chain. So Cyber Connect is a good direct comp. Thank you.
With that in mind, I will say thank you. And we'll call our last but not least, Mercedes from Kipu. Mercedes from Kipu. Kipu is building a supply chain financing platform for informal businesses in Latin America. Mercedes, our mother of bankers, I will let you. I'll give you the stage.
Thank you. Thank you. I'm really happy to be here and close this amazing event. I'm Mercedes. I'm the CEO and co-founder of Kipu. And in Kipu, we are building a supply chain financing platform for informal businesses in Latin America. So in Latin America, micro businesses are the economic engine. 9 out of 10 of MSME are classified as micro businesses. There's a funding gap of more than $1 trillion. These are IDB numbers. And where we are, our beachhead market is Colombia, where there are more than 6 million informal businesses, and just 9% of them access formal credit. So basically what we've seen is that these micro businesses are still micro and they don't become SME because of 3 main problems. The first one is that they're still offline. The second one is that 8 out of 10 businesses in Latin America are informal. This means they are not registered anywhere. And most of them, as a person, are blacklisted by credit bureaus. So they have a bad reporting in the credit bureaus. And they end up being excluded from the formal financial system. So they end up relying on payday lenders. So payday lending, or shark loans in the US, or we call it in different ways depending on where we are based. But basically, it's informal lending, which is a 600 million industry just in Colombia, right? So we see that there's a really big opportunity of doing real financial inclusion for small businesses in the region. So how we do it? We use artificial intelligence to assess creditworthiness in an alternative way. Why alternative? Because we use alternative data. So basically, we've been iterating our product until we ended up having our platform, which help us to record data of micro businesses in informality. What we do is businesses, wherever they are, they could be from their homes or they could have a store. Using their smartphone, they upload their business on the platform. They record their main sales and customers on a digital ledger. They upload pictures, videos, and certain different types of information that we record. And based on that information, we build a digital financial ID that helps them not just access loans with us, but also build their financial history, so then they can also untap other financial products. So at the core of our business is alternative scoring. Is really being able to understand which are all the types of data that we can collect from smartphones, from businesses, that can help us to build a different score that assess creditworthiness differently from the credit bureau. So we take digital footprint score, we have an image score, a video score, an NLP, which is natural language processing. We use voice, and also we untap in open finance. And with all this information is that we have our own scoring that we use to assess and provide loans. However, in all our iterations, what we notice is that just giving out capital is not solving all businesses' problems. We need more solutions that cover all the needs that they have that are not just capital. We were giving out capital, but then realizing that actually with that capital, when they go and buy supplies, they buy them super because they don't have enough capital to buy in bulk, or they need to go to a city center 3 times a week to stock up, right? And they spend money and time in transportation, and it's not as safety, right? So then is when our second solution started, which we call supply chain financing. So it's not just giving out the money in digital wallets, that's our first product, but also giving out the capital in big suppliers with which we make partnerships. So for the supplier, this has 0% risk. We finance 100% of the purchase our customers are doing. And what we're doing is a kind of collective bargaining thing where our suppliers are leaving their supplies at a wholesale price to our users. So our users are not just accessing capital, but also they're saving money on the supplies they need to buy. We want to be that one-stop shop that supports them in all the cycle of their business. So applying for working capital is extremely easy with Kipu. We have an application and we have a chatbot on WhatsApp. Both of them, you can do the onboarding and loan application in 15 minutes, even including the KYC. And after that, we allocate the money. But we are not just here, as I was saying, on giving out capital and supporting businesses, connecting them with suppliers, but also we are building a strong community of users where we are connecting them in a marketplace and in our app, and where they get tokens as rewards for the activity on the platform. And here's where Web3 taps in and why we're in this demo day, right? So basically what we're doing in Web3 is we're building a lending protocol where we can get more capital faster and at better rates. So we connect lenders from anywhere in the world. This could be individuals or institutional lenders that can buy Kipu tokens using USDC. And from that loan pool, we use that capital to provide it to our users based on our credit score. We build an oracle that decides to whom and to whom not we are giving out the capital. And based on the returns we are having from the loans is that we give back yields to the lenders. And at the same time, we reserve a percentage of that interest to build a treasury that backs our portfolio in case of default. And we build a reward system that comes back to the user as they pay back the loan, as they bring referrals, and this helps us make our community stronger. So we're building a system where if the lenders grow, our users grow, and also us as a company, right? So we scaled across Colombia. We are all across the country. We are 100% digital. Most of our users are women. And we are getting to every corner of the country with this solution. We've been growing 40% month over month. We've been alive all last year, and obviously this first quarter of the year. We have more than 3,000 clients with a 60% recurrence on their loans. Our business is really based on recurrence, on how they just don't get one loan, but they repeat and increase the amount of loan they get from us. We are having a 90% repayment, and well, we generated more than 10,000 chatbots already. What for growth is really important for us to build partnerships. I will just mention one of them, and I will cut here, Tomer. So basically, the most important one we're having now is with Claro, which is the main telecommunication company in the country. They have 30 million users, and we have a mini app in their wallet that allows us to get to really the whole country at once. We are a team of 4 co-founders that we mix experience from working with the informal economy, from finance, and a deep experience with artificial intelligence. Yeah, that's it. I will close here.
Can you elaborate on the partnership you just threw in when I disturbed you?
There.
Like,
okay,
just on that section.
Awesome. Yeah, so as a lending platform that
expand that section a little bit.
Perfect. Yeah, no, as a lending platform that wants to get to this segment, one of the main issues we need to tackle is go to market, right? So one of the partnerships we're having right now is with Claro. Claro is like the AT&T of Latin America. They are a Mexican company that is all across the region. And what we build is a partnership where we provide loans through their wallet. They offer our loan to their clients in the country. And we are putting together our credit score with their credit score. And this allows us to get to more users, and we have a revenue share model where, if we earn, they get a fee. So it's aligning also, incentives in a way.
Philip, Jane?
Yeah, it's super cool. I built supply chain finance software and like a whole platform for many years in one of my past lives. So super cool to see you doing this. And what type of supply chains do you see this is working well in? And is there some clustering then also being able to potentially use the creditworthiness of the larger customers? Or are there more just smaller supply chains with smaller folks circular within themselves?
Yeah, so we are connecting the small businesses with bigger suppliers. So we connect them with like really big corporations that they usually can't buy directly to that corporation because they don't have, enough quantity. So we are connecting them directly with the producer in a way. We are starting with the industry of food because 43% of our clients prepare food. So that's the first vertical we are tackling in with a connection with suppliers. But yeah, and the other piece that I haven't told is that once we connect them with the supplier, we finance the purchase, and the supplier gives us a fee of that sales we made to their business.
So you get repaid by the larger one, or you get repaid by the smaller one?
Repaid by the smaller one. I pay the larger one. The smaller, our client is the one that pays us back, but we get a fee, like a commission, of sales from the supplier.
And on the capital formation side, you mentioned both retail and institutional. Are those mainly based in Colombia, or are you looking to expand and gather capital from US or other markets as well?
Yeah, so currently we have a traditional debt line from a US institution. With the protocol, we hope to tap onto any, all around the world. Like there's no restriction for that. That's why we are also building the protocol. So yeah, it's really open.
And you see it both retail as institutional?
Yeah, exactly, both.
Okay, interesting. Thank you.
Super cool. Thank you.
No, thank you.
With that, thank you, everybody. I would say thank you, Mercedes. Thank you, Philip. Thank you, Jane. Thanks. Do you want to guys say one last word before I wrap up the event?
Sure. It's just amazing to see the energy of folks bringing credit like to underserved communities all over the globe, using decentralized technology, like decentralizing credit in a way in so many different shapes and forms. You said it earlier, like tackling the same problem from many different angles. And I think this is so needed, the different approaches, because it's not just one size fits all. Hats off to all the founders and teams who are building here.
Yeah, I can echo that. I think it's exciting to see how everyone is trying to indeed tackle it their own way, and some ways that you'd otherwise not think about it. So it's great to see those more diverse and innovative ways of credit lending, and seeing how you can use communities to work together and come with alternatives. So exciting to see how that's evolving and moving forward.
Thanks for having us.
Thank you very much.
Thank you guys for bringing your knowledge to the table. It was crucial. With that, I'll say to Stonks team for hosting us here on their platform, and to all of the people who came to see the demo day. It was a pleasure. I hope you enjoy it. We'll have it recorded, and you can always come back to the website and look at the companies and ask for an intro on the company page. Thanks, everybody, and have a